Alright, let's get it. So right off the bat, I'm looking at this consolidation we had Thursday and how we bounced off of it here. We were using this consolidation here as well, but as you see, this consolidation here and this consolidation here, they line up because these lows line up. So just using a smaller consolidation to give me a more fine-tuned area of interest. So based off of that, just how we're playing out right now, see how the market wants to open. So this is where we're at right now. And we have this imbalance right here. So we have this hourly consolidation that I'm looking at now, and then we have this hourly imbalance here, which price we wicked into. You see, we've been at the Asian range high. We had Asian range low already. We wicked both sides. So this is just showing us that we have consolidation right here as the market opens. So we want to see initially how the market opens and how can we capitalize off of that. Looking at a higher time frame, I don't really need a higher time frame today. And why is that? It's because we're making all-time highs, and we don't have no super crazy price action on the daily chart. So when it comes to opportunities, I'm more focused on hour and below. But if we start getting a nice push for today, then I'll use that for tomorrow. But I'm more focused on the lower time frame now, and still the 1 hour is not the lower time frame because it's the power of the hour. But I'm more focused on something that's happening right now than overall. So just kind of scanning through, like you see, we have this ceiling right here, or the civvy that price is trying to get into. We wicked into a couple times and then we pushed out of it, but we're not away from it yet. We have this low, but this low is swept by this low. Well, this low swept this low, and then we have this consolidation we can go back to. So there's not nothing much to hang your hat on when it comes to 4 hour daily. So I'm more focused on something that's going to happen a lot faster, because I'm not trying to catch a whole move, because there may not even be one, or that's not my focus. So we'll see opportunities the market's gonna give us today. Consolidation once again. Like, hopefully this is not gonna be Wednesday. If this is Wednesday, then I don't want to participate. So we'll see how this plays out, because we had this high taken and then we had this low swept. So price is really undecided what he wants to do as of yet. So we'll get more context clues when the market opens. And then today also, remember, on your chart, you have it to where if you look at the bottom, you have electronic trading hours here, electronic trading hours, and then you have regular trading hours. So like I told you guys in the beginning, I like trading early morning, so I don't have to deal with the market opening, because I don't have to deal with traffic. So in this case, what I'm teaching you guys live at 9:30 open, then you want to use opening price once it opens, and then how it's going to play out after that. So in this case, you can use RTH, which is regular trading hours, which shows 9:30 open all the way until market close, and then it closes at 4 or 5, and then it opens back up at 9:30. I don't use it much, but I think I'm gonna start using it a lot more, because we trade the 9:30 opening. But my daughter is starting to go back to school, so I may be trading early again, doing the live earlier. So still trying to figure out a time to go live and manage all of that. But for the most part, right now, if you're trading 9:30 opening, you can use the regular trading hours alongside the electronic trading hours to get a feel on what's going on. Because if you look at the electronic trading hours to the right, or to the left, I'm sorry, and this is both hourly charts, you see that we have this push down coming to this consolidation, but all of this hasn't happened yet. So when price opens, wherever price opens at 9:30, that's going to be that gap. So we closed here, and then once we close, whatever it opens at, it's going to open with a gap somewhere over here, depending on this candle right here. So then that gap will be something that price probably wants to feel, or we can continue pushing up, but it just depends on price. But when you're using regular trading hours, it helps you see the market close, the true market close, and market open. But a lot of times too, that overnight session helps gear you up for the liquidity you need to go target. So you want to use both in correlation to get the best idea on what price wants to do today, and that's what we're going to be doing today. So my chart to the right will be my regular trading hours, and the chart to the left will be electronic trading hours. And then I'll repeat myself again once we get further into the live. But interested to see what this market's going to do once it opens, just because of how it's been playing out so far. So that's going to be interesting. We shall see. I think I'm going to go with the 5 minute on the regular trading hours, just to keep up with current price. Probably do the same thing we did yesterday when it goes down to the 1 minute. Depending on how price plays out when it opens up. If we start getting nasty consolidation, then we're going to have no choice. But if we get a nice decent push, then that'll give us a nice start to what we're looking for. So as you see, even on the regular trading hours right now, you have this inversion right here. But price, I think they inverted or did it not. So you can say it didn't. So we'll see. I want to give the market, so many wicks for sure. A lot of wicks. So right then and there, seeing that, I'm kind of like, I'm 50-50 on it. So we're going to see how the market opens. So there's that gap I was talking about, because of the gap between the close and the open. You see there's no gap on the electronic trading hours. But that's not something you will have to be dealing with if you traded a lot earlier. But since you're trading the market open, that's something you want to pay attention to. But usually just come down, fill it, and then from there, price will do what it wants to do. But you can still use this as a guide. So we'll see. section we get. Okay, so right now we are holding off at this hourly hourly imbalance here. Once I get a feeling for what I want to see on the hour, I'll drop down to a 15-minute. And then, like I say, once I kind of know the area I want to focus in, then I'll go regular trading hours. So I'll go to this chart here. But for right now, I'm just trying to get in sync with what's going on. And market opens, we're just sitting inside this consolidation. So I'm just hoping that Wednesday is just not all consolidation, because I don't want to participate in consolidation. Just like even this still was consolidation. Even though we had a nice down move, it was still back and forth. It wasn't clean. Clean is something like this, where it bottoms out, sits there for a minute, then pushes up. This is kind of sitting there, push up, pull down, push up, pull down. So we'll see how this plays out. If it does come down, I do see it coming here. So we do have this imbalance right here. It's obvious stuff. Right now, you want to point out, as you can see. So there. So I'm telling you guys, if you don't go and back test when you're done, what you've seen and how you could have seen it better, you're doing yourself a disservice. I'm doing that every single day. Even when I'm still teaching, I'm taking time out to go back test and study every single day, just to sharpen my knife. Even if you got everything right, always just look and see, like, okay, mentally, where was I at? Or was I in good shape? Was I focused enough? All that stuff matters. Everything. So don't think it's just a chart. Okay, so we have this hourly candle. So remember, this candle has 30 minutes until it needs to close. So until then, that hourly imbalance, it's like we see it, but you can't really hang your hat on to it until like the candle starts to close for the hourly, because you want to see what's happening around this imbalance. Or you can go to a 15-minute and kind of get in sync around this area, but you have to realize too that this is an hourly imbalance. So price can do whatever it wants in the lower time frame, and then boom, punch down. Happens all the time. So whatever you mark your imbalance up, make sure you're looking at that chart. So if I want to focus on an imbalance in this area and I want to be on the time frame I want to be on, see if there's a 15-minute imbalance in this hourly imbalance area, and then use that imbalance instead. So what I mean by that is, so see how this is hourly imbalance. I want to focus on 15-minute chart, and I will find the hourly imbalance near this 15-minute. I will find the 15-minute imbalance near this hourly. So there's two. There's a tiny one right here. It's super tiny. Tiny one right there, and then there's one right here. So I'll just use the obvious one. But I'll still mark up the tiny one because that can come into play. So if you get confused, you could say, like, if you get confused with imbalance as well, you could say hourly / 15-minute if you want. Or for me, I would just say 15-minute. But if you want to like make sure that you remember that this is hourly as well, then you would say hourly / 15-minute. So there, I'm gonna mark this tiny one because I'm using this chart as confluence. I'm not using the chart as a trade. So even if I seen a model on the 15-minute, unless it had like decent risk, I would just use it as a confluence. And a lot of times too, if you have an imbalance like bearish or bullish, and you don't want to put busy or sitting your floor ceiling, usually I just do a plus sign or a minus sign. So this will be busy, so I'll do plus. So imbalance plus. So whenever you see a plus or minus on my imbalance, it's because it's plus is bullish, minus is bearish. Okay, so we are just floating inside this consolidation. This is hourly. Then I can make this 15-minute. So let's make this 15-minute as well. focus on 15-minute price action. There. So this is what we're doing right now. Consolidation. We got a slight opportunity here with this inversion here and the break above here, and then it came back down to this imbalance a couple times, and it came down to this one once, and then we pushed up going for the high here and the high here, but it's consolidation. So I'd much rather get out of this, and it gives me a nice expansion up, and then I have some room to figure things out. But to me, it's too clustered, and I can go down to a lower time frame and try to find something, but I don't want to force it. So you got to be a good judge of character on that. But I will go down there and give some examples like we did yesterday, and if there's opportunity there, then take it. But I want to. My main thing is to show you guys multiple opportunities, and you're going to see it as I'm breaking down the chart, just seeing what I'm looking at. And then from there, you can pick and choose based off the bias that you see, because I can see sales and you can see buys. I can see buys and you can see sales, because I know you have the ability to, because I taught you. And I know what you're looking at, and I know what you're looking for. And there are going to be multiple ways to take it, or multiple opportunities. You just have to find the right one for you. And for me, the right one is the right risk. So looking for a breaking structure at this moment. Yeah, you can say that. A breaking structure, but let's say even if price was to like consolidate real tight here, and then it gave me a nice expansion down, and then started doing something again, even I'll take that. So where it's clear separation, and then I can kind of get a group or area which I can navigate off of that like we did yesterday. Because remember yesterday we had a move like this, but our focus was the inside of that move. I just need a clear direction of one way or another. But when you got something like this where it's back and forth, it's undecided. So all you need is a little momentum, and to take it up one way or down the other way. So you get chopped up like that, trying to catch it back and forth. So I'm not trying to entice myself by telling myself that there's something here. It could be. I could go down to a low time frame and see it, but what I'm seeing obviously on a 15-minute with a wick and that small body back and forth, I'd rather just let the market do what it needs to do for the next 15 minutes or so. Well, in this case, next 6 minutes. Let that 15-minute candle close, see how it prints, and then kind of dictate from there. But right now, we're just back and forth. We're just stuck in this range. So I can't tell what price it wants to do yet. And I could go to a higher time frame and try to diagnose it, but I don't want the higher time frame to lead me off of what I'm trying to focus on, which is just something I can get in and get out. And it's Wednesday. Wednesdays are consolidation days. It's kind of a back and forth day. Like usually Wednesdays, so Mondays, I'm waiting for a better opportunity. But if the opportunity presents itself, I'll take it. Tuesday is usually an expansion day. That's a good day. Wednesday is usually consolidation for the most part, or it can be expansion, but most times it's consolidation because it's the middle of the week. And usually we get a good move at the beginning of the week, a good move at the end of the week, and in the middle of the week it's just kind of like back and forth. Thursday, it's like Tuesday, and then Friday can be a toss-up. But that's from me seeing the market so many times every single day. Now, when the market changes, I have to be able to adapt to that. So I can't just say, oh, every week, every Wednesday, the market's going to consolidate. It's a possibility. I'm anticipating that. But if it doesn't, I'm okay to get in sync, because that's the most important thing, is getting in sync. It's not being right or wrong. So right now, all I'm focused on is just getting in sync. And if I don't feel as if I'm getting in sync right now with the market, even though it's in a range, so it's kind of easy to get in sync with the range, because all you have to do is go down to a lower time frame and get in sync with what's going on now. It's just like, do I want to deal with that? Getting into a trade and it consolidates and then it pushes away from your entry from a little bit, then it runs right back up into it. Like when I take a trade, I want to take it and it runs away from it. I don't want it to come back. So how do you avoid that? Like it coming back, not trading consolidation. That's a big part. Now you can trade in consolidation and catch the trade and catch the breakout. So, and then some people are breakout traders to where they only take the trade once it breaks out. That's risky because price can either you're taking the breakout and your stops are super small, because if you're trying to catch the breakout and price pulls back, then you just caught in that. But there's a way you can do that. Let's say this was an area you're looking to buy at, and then this was a range from this high to this low. That's your dealing range. So you just look for a discounted buy, and you're looking to go break out, and that'll be your trade. But you have to be sure that that's the direction you want to go, because those trades can pull back on you a lot, especially inside of consolidation if you're not watching it for the right things to look at. So I don't want to entice myself by going to a lower time frame and feeling as if I need to go take something because I can. But I would rather let this 15-minute candle close, and then once it closes, I'll feel comfortable with like, okay, the first 15 minutes after the opening, we didn't go anywhere. So now when I go down to a lower time frame, I have that in the back of my mind. So if I just see a move that happens out of nowhere, I'm not jumping to it, because I'm like, market hasn't really even did anything yet. So I need to wait. And you gotta know when to cut it off. You gotta know when you see this market, you like, yeah, don't force it, don't rush it. Like literally, you gotta see a market like this. Let's say if I was sitting here for 45 minutes and it was just doing this, I'm cool. Because where is the volume at? Where is the volume going to come in at? So days like this, you have to be able to like, no, I don't like this day. You'll know the days you're like and the days you won't right off the bat, especially when the market opens. Like, what is this? It's just literally back and forth. This candle, if I went from high to low from this candle here, prices back forth, and this price right now is inside a premium of this range. That's it. That's currently right now. So it's just like, okay, what does price want to do from here? Well, it doesn't know yet. So if I let it close, the candle closes, and I see the bulk of the volume inside of this high and this low, it's up here. Okay, then what is volume going to do with this? What is volume of price going to do with these orders here once this candle closes? Is it going to drop down? Is it going to continue up? We don't know, because we don't know if this is going to be the high or low. So I just want to see how price is going to play out. But everything is broken down to pieces. I'm just looking for the right piece for my puzzle that kind of puts the story together for me. And look, this is the last 1 minute of that 15-minute candle, and see how we got that nice push up. I was telling you guys the close of a candle. Once the candle's about to close, you get that nice push up. Same thing with the hour, same thing with the 4 hours, same thing with the daily. It's all the same thing. Let me see. I might have to leave for 10 minutes. Get her together. John Wick, the candle. Yeah, for sure. John Wick vibes for sure. And then you see, you look right here, we have this imbalance right here that's sitting there on the 15-minute, but look at that candle. So just because you see that doesn't mean oh, I need to take this because it's right here at the Sibby. No. You see candy on the ground, just because it's candy, you're gonna pick it up and eat it, right? No. So we don't just take anything. Cool. So look at that. This body was super tiny, but it ended up closing with all this volume here. So if I was to measure that candle from high to low to look at where the bulk of the volume is, it's inside of a premium. So is this going to be expansion out of here and going to be the breakout, or is price going to sit inside of this and then drop to the downside? But now that we have that, I can go here and look at that. That's the 5-minute. That's disgusting. And then if I look at it in electronic trading hours on the 5-minute, look at that. Super nasty wick, and then prices pushing up. So There's no need for me to jump to like, oh, I gotta participate. No, let it play out because you don't want to get yourself in the midst of missing moves. Like I just missed it, I missed that, like right here. So you had this inversion here in the 1 minute off this 15-minute imbalance, and then you had this confirmation right here. So your trade here was here. Yes. So it gave you a 1 or 2. This is not a 1 or 2 I would have wanted. Simple as that. But it's decent risk. So what happens is you have to note take these things. Like, oh, okay, this happened, but look how that candle was pretty. When this is going back and forth, I think I would have held it. It wasn't really going anywhere. So now, but think about it. This was the bulk of that volume as well. So we go, and I'll show you. It's that same candle here. There, look at that. That's the bulk of the volume. So when you're able to know how to look at price, everything makes sense. So let's see if we can put something together now. We got a little bit of data after the market opens. So price is super consolidated. I don't like these wicks. I just need something that has decent risk. And I'm not using, look at that, nasty. But I'm not using regular trading hours yet because I need a little bit more data so that after session data to use as confluence. So right here, electronic trading hours, regular trading hours. So we only have this back and forth on our regular trading hours because the market just opened. So we closed here and opened here. And we have all this data too we can use. And this is nasty price action. So you see how we have this expansion down? Like, you could look at this as consolidation here. So price ran up. You had this little tiny push up right here. Right there. You had this push up right there. And then right here, price started consolidating a little tiny bit. Then we broke out of it, came back above it, broke below it, and then went to the downside. So from there, then you wouldn't use it because price didn't show signs or willingness to come back to it. But then we pushed down. We had this tiny consolidation right here, and then price punched down and we came right back up into it here. But look how price came back up into it, and then we dropped down again, then punched up again. So this is not super clean to me, so I'm waiting. So look like here. So you had that. You came back up into it, tapped it, went to the downside, took out the lows, tried to push back up into it, dropped down, and then pushed it back up again. Came to it, bounced off of it 3 times, and then broke above it. Now going back below it. This price action is not clean, but why is it not clean? It's because we're getting consolidation. So if you're telling yourself like, oh no, this is clean price action, no, it's not. You be lying to yourself. But let this play out really fast. I'll get her together. So give me 10 minutes. I'll be right back. All right, I'm back. Let's see. Okay, so let me get that pushed down. Now let's see what's happening. So I'm gonna keep everything on the 15 minute. So this is all 15 minutes. Okay, let's focus on price action. Lower time frame. Let's see if I can map this out. Okay, so gave it a little time. Prices back and forth. So let's see if I can map out what's going on. So you had this swing high here and there. So we're gonna go here to that. Here to that. It's gonna be that for me. Go from this push down, this swing low at first. So that made this swing low, pushed up, came down. Now prices pushing down. So for me right now, prices like this. That's what price is doing right now. And this is just me following the price right now. And if it breaks out of here, it's gonna make a new range. But to me, this is where price is at right now. On the 1 minute. And like I said yesterday, using the 1 minute to show you how you can look at every other time frame. The 1 minute just gives us more information or more data to use while we're live. But if opportunity pops up, it pops up. So like even in this scenario, you have this inversion right here, and a tiny confirmation right here. And then if this would have been the initial stop loss right here, price would be sitting like that. And it broke below this candle here. Where price has already went to go highs. This is just focusing on current range, not overall. So don't let this range make it yellow. Don't let it mix you up. When you see me marking up on the 1 minute, that's just me following price. That's it. Showing you how to stay in sync. As you see, in this range, there's nothing to hang your hat on besides the high and the low. So this will be a range you would do what? You just let it play out. And then if you ask yourself, like, is this the current range? Well, how is it that I have the high on here and the low on here, and we're sitting right at the midpoint every single time? 1, 2, 3, 4 times. So I gotta be in sync. Nasty price action. This is a real nasty market so far today. Okay. Okay. That drop right out of premium. Punch to the downside, taking out this low. See how far it wants to go though. Basically 23,500 is the price. That mid-figure price where we're sitting at right here. So price is dropping off of that. So see, this is a punch down. Disgusting. This is not clean price action. You don't want to get yourself caught up in stuff like this because you want to chase something. It's not worth it. In this market, you could do everything right. It still goes wrong. And you gotta chalk it up. That's it. So either that or you don't participate. You wait for opportunities in which you want to participate because they're the right opportunities. But makes sense. It's Wednesday. Look at the hour. I like the fake for sure. If we don't get out of this range, next 30 minutes, I'm gonna hang it up. There's no point in sitting. We're gonna just be in this range all day. Because I wouldn't look for anything inside of this range. If I'm not live and I'm trading with myself, I would not be sitting here right now. Even if you see enticing moves on the 1 minute, looking at the 15-minute. That's what your focus is on because that's your directional bias. But this push up makes sense. Why? Because we're in a discount. It took out a low and now it's going to premium. You have an opportunity if you want to take it. But like I said, I don't like this market. But you do have this inversion here and this confirmation here. That price can likely get up to, take out this high, and then punch to the downside. What is that? How many places that? 14. Right. Nowhere. Nowhere fast. So that's why you gotta have that kill switch. You know, if you're in a market that you don't like, just imagine being in a market you don't like. You've been sitting here for an hour, you finally see a trade, and then you get into that trade, and it just gives you the worst anxiety because it's not going the way you want to see it go because of the type of market we're in today. So you being aware of that, no, I'm good. I'm not participating today. Right then and there, you just saved yourself a whole day of worth of headache. So it's just that simple. Or it can be that simple. So like I say, next 20 minutes, if it's still just sitting inside of here, I'm good. There's no reason to participate because there's no reason to rile myself up to try to take something inside of this if I don't deem that it's going to be a credible trade. Now, could it just punch up or punch down? Yes, of course. That's the market being the market. But the gathering of everything, the foundation of everything, I don't like it. Like we just opened and we went nowhere. So where's the volume at? Where's the traffic? Traffic ain't moving right now. This low, takes out this low, and the body closes below it, then I'll use this high to this low. It wicked it, so I may use it. Still 1 minute, so I don't know. We'll see. Did it even wick it? I don't think it did. Nope. This low is 467. 467. Yep. Just went right to it. But because we did, you look right here, this push down, when we took out this low, is this price leg. And then this high was taken out by this high. So you could use this. And this is just keeping up with price action. That's all it is. It's not even you looking for a trade. And that's the thing that's you have to use for forward testing or use with live data, because when you're back testing, you don't know how you would make new dealing ranges or how you would flow with the market. You can look at it. If you have the skill set of looking at it from that perspective, then you'll get it. But if you don't know how to look at it from that perspective, then you'll always be trying to get lost with it. So that's why it's important to look at live data and be able to see how you would follow it. Or you watch the recording, just watch how I record it back. Just watch how price action was playing out. Price can be here for hours. You don't want it to, but that's just one of those days. And I'm telling you, once one of these seasons, you're gonna get a market to where it's just in your favor all the time. That feeling hit different. That feeling definitely does hit different. If you feel enticed to take something right now, then you got other things to worry about than market structure. You want to focus on what feeling has you wanting to take something. You feel like you're missing out? I feel like I'm missing out. I feel like that all the time. but it's something you learn to contain, control, um, because you realize that this is not going anywhere. It's an everyday thing. So you're in it for the long run. You're not trying to make one good trade and that's it. That's not going to happen. Something you want to be able to consistently do every single day. So you have to practice that state of mind. Just not feeling like you're missing out on anything. Because the feeling comes from a big, crazy push. What that's going to do? You get more points. Okay, cool. But is it part of your trade? Because you can be the person that catches 150 points, and I can be the person that catches 30 points, and I'm making 5 times what you did with 150 points. But does that mean that I'm the better trader? No. It's just I was probably more patient waiting for the right opportunity, so I probably had smaller risk, so I was able to go heavier in size. Simple. Like this one right here, you got price take out that high with these equal lows, and you have this inversion here and then this confirmation here. But this is the 1 minute. Price can set aside this confirmation, punch to the downside, taking out those equal lows, or you can punch back up to the upside, making a higher high. But what's the risk for you? That's the key thing. So 14 points, 16 points, 1-to-1, You got 13 minutes to do something. And I hope this is helping some of you guys just not participate and getting caught up in this. This is disgusting. Punch up. You had a inversion here. I think this is inbound here. Yeah, wow, little tick. So, but you didn't take out low. That's an equal low. about telling you guys, if price is doing something, it's always doing something for a reason, right? So I'm looking, and I'm like, okay, price is sitting here, and then you look, you scan across, and you see that this is all sitting in the same area. So I'm looking, I see this push down, this push up, and this consolidation right here. We push up, come back to the same consolidation, and then we get this breakout. So I think we talked about this yesterday. So price is just sitting inside of here. 15 minutes. Super nasty wicks. Let's see. 8 minutes left. Let's see if we get a nice push. I want to see it break this. This push is coming because it'll be the last 6 minutes of a 30-minute candle and the last 6 minutes of a 15-minute candle. Break it. Cool. So now this is our old range. This is the new range being created, so I want to see the price that comes down, and then once that price that comes down and it creates that new low, then that'll be the new range. Unless prices goes up and it takes out the high and continues. So this now is old range. Let's make it black. That's just to represent that it's the older range, and you waiting for a new one. So it's like it's dead. But could it come back to it? Of course. And then it can come back to the premium and continue going up. Because the premium of this range now becomes a discount of whatever range it's going to create. And if that, let's talk about it. If that confused anybody, so I said that this can become the discount of this range. So let's say price pushed down and it made a swing low inside of here, then that range would be from this high to this low, and then this is discount for the new range, and this is premium for the old range. So now your discount becomes your premium. following that 15-minute imbalance. So you can see it. Yeah, fellas, this was a wash for me. I'm not participating in this one. Let's go ahead and let it ride out. Let today fade out. Come back, kill it tomorrow. So we'll be back at it tomorrow, my guys. I will see you guys in the morning, same time.